I didn't expect this kind of huge jump. Or, Shonali's been pointing out, the rise that we've seen in Treasury yields on the 10-year, 12 basis points over the last 3 sessions. What is the market telling us? Is the market telling us there are more bigger rate cuts to come, or is the market telling us they've nailed the soft landing and we're good?
I definitely don't think they've nailed it yet. I will tell you, coming into this, the positioning was interesting because from how many people were long Mag 7 tech, the positioning was already quite full. And then on top of that, what I look at, the derivatives were also telling you people were quite nervous. There was a lot more demand in hedging than we've seen in a really long time. That really started to inflect after that August 5th spike. Now, it's a little too early in the sense that the market's just open. I think people will start to rejig and reposition today, but I'm very interested to see if that sticky downside positioning in the options market stays, or people say, just kidding, I'm not worried anymore, let's take those hedges off.
This is just an incredible move in the market the next day, and it does conflict with what we're seeing in the bond market, as we've been saying. It's like the bond market is telling you that they're worried about growth in the longer term, particularly when you see the move in the 10-year. But the stock market, the exuberance is wild. You see almost every major industry group up. We're at a new intraday record high to start the day. Which market is the right read?
This is, I think, the age-old question. Now, if you look to history, it's typically that the bond market tends to be a little bit more thoughtful. The equity market tends to be a little bit more reactive, and oftentimes there's a catch-up from the equity side. I'm not saying that's always true, but historically, when you look at this relationship, it's the equity market that eventually starts to digest, but it reacts and has that momentum first.
So then how do you think about the setup now? We have more information. We have that first 50 basis point cut here. And whether or not you agree on whether we'll get 50 next or 25 next, is there a clear trade to be had now that we have begun this rate cutting cycle?
Yeah, I would say 2 things. The first is, no matter where you stand, the fact is the equity markets are at all-time highs. So whether or not you think that means we'll have a drawdown or you don't, it's a function of hedges have become attractive no matter what place you're in, simply because you have more to protect. Does that make sense?
Yeah.
So for me, when you see volatility slowly trending up, but it's still relatively inexpensive on a longer-term historical level, I think it makes a lot of sense to have those conversations about protection. So, from a trade structure perspective, we're talking to clients who are in the boat of being happy with where they are this year, but also folks who aren't and are still concerned. And those structures are lining up right now for either of those camps.